President of the United States there in the Oval Office with the German Chancellor ahead of their bilateral meeting, which will take place following this, surrounded, of course, as you see, by the cabinet. The president addressing a number of topics, including the rationale for the strikes on Iran, refuting suggestions that Iran forced the president's hand. The president saying, in fact, they did not. I might have forced theirs, he said. They, the Iranians, were going to attack first. That alludes to a comment that was made last evening by the Secretary of State, Marco Rubio. The Wall Street Journal out with a report today questioning that in some respects. You also saw quite out in the open there frictions that do exist between the United States and members of the EU, including, as the president was talking about, Spain and the UK. The president saying that we're going to cut off trade with Spain. He's obviously still smarting, as you heard as well, from his losing the tariff case in front of the Supreme Court. On oil prices, the president clearly seems to be resigned to the fact that they may in the interim continue to move higher, but that once this is resolved, they will move lower, perhaps even lower than they were heading into this conflict. You can see crude oil here is up by a little more than 6%. We'll bring in our senior Washington correspondent, Eamon Javers, now, who is in Washington to react. Eamon?
Scott, that's right. I mean, I think it was striking here that the president is saying more or less exactly the opposite of what the Secretary of State, Marco Rubio, said yesterday. As you pointed out, Rubio talking to reporters on Capitol Hill saying that the reason that Iran was such an imminent threat and this military action was necessary was because the Israelis were going to strike Iran, and if that happened, the Iranians would hit the United States. And Rubio said, rather than absorb that blow, the United States decided to get in alongside the Israelis. That comment sparked a lot of consternation, particularly on the MAGA right, that the United States had been led into this war by the Israelis, and sort of they had the upper hand. The president here responding directly to that, he said, no, if anything, I might have forced Israel's hand. That is, the president wants to be seen as the person who was the decision maker here. He doesn't like the implication that Israel was the decision maker and the United States simply followed along. In terms of the Iranian leadership and who's going to be next in Iran, the president didn't specify a particular individual or cadre of individuals that he has in mind. He said that a lot of the people that the United States was looking at to take over the country have now been killed. He did say that somebody from within would be a better choice, somebody who's there, who's popular and perhaps more moderate. But it doesn't seem, Scott, to my listen of that comment, that the president has a plan here in terms of who it is that the new Iranian leadership will be. Clearly some disarray and some chaos in the wake of American and Israeli strikes on leadership there. And then finally, as you point out, on oil, the president said we might have a little higher oil price for a little while, but as soon as this ends, we'll have lower oil prices than ever before. So the president clearly prepared to grit his teeth and ride this out in terms of oil prices in the short term, with the idea that on the other side, that might be a problem that could be solvable in the long term. And finally, Scott, I would just say I was just talking to a former CIA station chief in the region who said that what he's looking at here is, in terms of the new leadership of Iran, is the Iranian army. The regular army forces there, known as Artesh. That force is worth watching here. If they stay neutral, that's one thing. But if they start to lean toward representing the people, quote unquote, that could be something that could be a very pro-American development in Iran. So that's what one former CIA station chief tells me he's watching in the short term, Scott.
Okay. Eamon, I appreciate that very much. We'll come back to you as needed. That's Eamon Javers down in Washington. The market moves have been interesting today, down rather sharply off the open, but we've cut the losses about in half. As I saw on the last check, there's the S&P 500, still down by almost 1.25%, but nonetheless better off than it started this day. I've got the investment committee with me today, too. Joe Terranova, Malcolm Etheridge, Sarat Sethi, Josh Brown. Joe, your thoughts first.
So there is no reason to define the volatility. The volatility is here. Understand that. I don't think we have enough clarity. I don't think we have enough confidence in the clarity to expect on a day like yesterday, where it looked as though you had the all clear and the market's going to break out to the upside, to believe that can unfold. I think the same thing is true this morning. I don't think you have enough clarity to believe that there's a significant deterioration that's unfolding. So what do you do in that type of environment? You try to find opportunities where you can create alpha. I said yesterday, CF Industries, that is a name. That's a equity that I purchased yesterday. That's where I believe you can create some alpha because of this situation. You maintain exposure, to the refiners, diesel prices, they are soaring today. If you believe there is a supply disruption as it relates to oil in the Middle East, look up north, Canada. You have Suncor, you have Canadian Natural Resources. Have some exposure to the financial exchanges. We have CME, we have ICE and JOT. CBOE is a name that I am looking at currently. I think that is where you have to think about the alpha opportunity. And lastly, the Mag 7. I told you last week I didn't think you would buy Microsoft. I will change that right now. We own it in JOT. I think there's resiliency in the Mag 7. I'm seeing it reflected in Microsoft and Apple and Meta.
Notice that also, that Microsoft move into the green. Malcolm, over to you. According to Barclays today, as we see, many different parts of this market moving, the geopolitical risk index surging to its second highest level on record, only behind the events of 9/11. BTIG's Jonathan Krinsky with a note today that says, when missiles fly, it's time to buy. Typically, sharp moves on geopolitics are not durable, he suggests. What are your own views?
To that end, I think this is the kind of market where opportunities are created. It's not a time to be buying the entire market across the board. We haven't seen this level of dispersion within the S&P 500 in quite some time. I'm, along with other folks, have been sitting at this desk for over a year saying that a buyer's market is coming. This is the buyer's market. So Barclays had another piece out earlier today pointing out the fact that about 2.5% is the trading range on the S&P so far this year, but the average company in the index has moved 7 times that amount. So if you look at a company like a Microsoft, you mentioned, a Palantir, for example, they're down about 15% so far year to date, but you've got like Devon Energy, for example, or Diamondback that are up more than that amount the other direction. And so the dispersion between materials and energy, which are leading the S&P so far this year, compared to financials and tech, which led last year, couldn't be better. And so I think this is an opportunity to be buying your favorite stocks and not necessarily trying to just grab everything as a basket.
So, Rob, energy obviously is where a lot of the focus continues to be. We can take another look at crude oil spiking again today on concerns oversupply over the Strait of Hormuz being closed, or at the bare minimum, some degree of disruption there. Josh, it turns me to you. Natural gas is in focus today, too. You sold Devon Energy. Tell me why. It's still on your best stocks list. Malcolm just mentioned that name. Why are you selling it here?
I took a profit. Look, the energy stocks have been the place to be this year. It's a wild year in terms of dispersion. Citadel Securities put out a note a couple of days ago talking about this being in the 97th percentile of dispersion of returns going back 3 decades. And even if you're not looking at the data, just anecdotally, you look at open your brokerage app if you're a retail, if you're an institution, you're an asset manager, look at the sheets of your positions. It is unbelievable the degree to which stocks are diverging from each other. And what's most interesting is we're in an environment where more than half of all active managers are outperforming. Why is that? Because they look different than the S&P 500. The S&P 500 is not having a great go of it. However, you look at sectors that are tiny in the index, like energy, and that's where all the performance is. The energy sector, as of the close yesterday, was up 28% in total return this year. The second best sector, materials, up 17%. Nobody owns these stocks in size. You can't. They're not big enough for the most part. So I'm out of Devon, took a profit. I am long ExxonMobil. I have not come out of that. I'm rolling my stops higher. Put up the chart of that one while I'm talking. 100% of the XLE names, Judge, are above their 50-day moving averages. This has been the case every day for 20 straight trading days back to the first day of February. These are the names. Today, only half of oil stocks are up. Some of them, there's profit taking. Today is a day, I think, where you look at the areas of the market that you don't have exposure and try to find something to do.
Coming into this number today?
Yeah, you're talking to somebody that rode this stock down in the summer of 2020. I guess it was 24 now. I don't even know. When there was like an outage around the world because CrowdStrike pushed an update, and there was like a 24-hour hiccup in all these customers. They fixed that problem. The stock fell, I don't know, 40%, and then went up 100 and something percent. So If I rode that out, I really don't have an issue riding whatever this is out. I don't believe in it. I think it's a fairy tale. I think this idea that Anthropic launched a bug detector, therefore Fortune 500 companies and businesses and governments around the world are going to rip out their cybersecurity is the dumbest thing I've ever heard. And I've been on Wall Street 28 years. I still think that selling, staying long, believe in George Kurtz, believe in Falcon, and I think this thing under 400 is a screamer.
Josh, who has this belief, UBS on Friday said their highest conviction overweight continues to be emerging markets. The EEM only up 4.5% year to date, but that's still 4.5% at least better than what we've done here. Other markets all around the world have better returns to this point in this still young year than the United States does. What about these calls?
Yeah, look, I think this thing is going to have legs beyond just 6 months or a year. Over the last 15 years, we've really seen like these 3-month rallies, 6-month rallies. People have gotten very frustrated because every time you get bulled up on international, it like fades away and the Mag 7 come roaring back and you feel like an idiot again. And you're back to apologizing for your clients. Why do we have this 8% EEM sleeve, right? Like that's the thing that allocators are sick and tired of. I think the switch flipped. Some of that is structural dollar weakness. Some of that is onshoring. We're not the only country that recognizes the strategic need to invest in infrastructure within our own territory. And then some of that is just, plain vanilla growth initiatives happening at the government level that's sparking better stock markets overseas and more enthusiastic investors. But when you combine those things, Judge, you have to say this is probably going to be different than those 3-month rallies that faded away. This one looks like it has legs and there's a fundamental underpinning. And so I agree with what Joe said. We are long international stocks, international value, international small cap. They look unbelievable. They are lapping the S&P. I don't see why that has to stop.
We're back. Josh Brown's best stocks in the market. That is what we're doing now. And the spotlight today, Josh, is on where?
We're going to look at chemicals. Guys,
I'm surprised.
I got to tell you.
You think it was my best
I got to
stocks?
tell you. All right, let me do my shtick.
Okay.
I got to tell you, this is one of the areas of the market where I find younger investors literally know the least, and there's a good reason for that. These stocks have largely sat out a multi-year bull market. They've never seen these go, but when they go, they really go, and I want to show you 3 of them. The best one is Ecolab. ECL is the ticker. This is Halo AF, and I'm going to tell you why. Basically, what this company provides cannot in any way be disrupted by anything going on with AI. The stock is acting that way. It's above both moving averages right now. And even on a big blood red day for the market, this thing is holding its gains. I really like it. I think you can pull the trigger right now. I want to tell you about LIN and SHW. I think SHW, Sherwin-Williams, the weakest of the 3. That's probably not the one I would run to. LIN, very interesting. This is Lind. This is chemicals and air and all sorts of things. That $500 level seems to be really important. It shook off the intraday weakness, rallied right back there, had a massive earnings beat the other day, and you could see a golden cross starting to form as that 50-day gets above the 200. In my column for CNBC Pro, I have the risk management levels for all 3. If you're a subscriber, you could see where that trade might change. But right now, I think these stocks are all going to work.
So, Lindy, if you want to buy European and international exposure, you also want to buy our products, which is one we own, which is hydrogen and liquid gas. That's another one. And to Josh's point, it's something that's very under-owned. Most investors don't know about it unless you've been in the game for a long time.
We own it. Very strong capital allocation strategy. We also own Ecolab. They have very strong free cash flow as well. Balance sheets are phenomenal. The material space right now is a sector that you want to have ownership to, despite what you're seeing today from Freeport-McMoRan and Newmont. Yep.
I know what Halo stands for, but AF? No, I'm just kidding. Don't go there.
We're going to have to leave it there,
Don't
Judge.
go there. Yeah, we'll have to leave it there.
We'll be right back.
We will have to leave it there. I do want to talk about some other stocks that are in the move. On the move, excuse me. Now I'm all flustered. Archer Aviation. They're calling for an adjusted loss before interest, taxes, depreciation, and amortization. Could that be you, Tom? Josh, you own this stock.
Yeah, look, I think it's not that complicated. These are highly, let's call them experimental technology companies. However, this isn't a big industry for the future. We don't know who's going to win, so I own this one. I also own Joby. I think I'm twice as big in Joby as I am here. These are not gigantic positions for me because I recognize it's going to take years before we see like cash flow generation to justify the valuations. But I'm still long, and I follow the news every day.
I haven't gotten your view, I don't think, Josh, on Netflix since they bowed out of the bidding. So, you know, the big news for those who may not remember is that you pared back your position substantially after the news first and their bid first emerged several months ago.
Yeah.
Stock obviously went nearly straight down. Guys, can you show me I don't know, 6 months? Better than that for me? Can you show me 6 months, please? Because that shows.
They showed
there
you 6 days,
Thank you.
Judge.
It's all right. They adjusted. They're quick. They're good. 6 months shows the decline. Now what?
I got out of most of my position as it broke below 100. People, the street just hated the deal. They never liked the deal. I think it's probably a situation where the right bidder won the company. Like this, Paramount needed this. Netflix didn't need it. It would have been nice to have. They would have picked up a lot of like really great properties to do new shows and spinoffs, and they would have picked up their own studio lot, a gigantic one of the original studios, but they never needed it. And I think that's what you're seeing here in the chart. I did add a little bit in the 70s, not enough, obviously, in hindsight. But I think that this is back to being a constructive name. And I think this is a stock that if you've missed it over the years and you're looking for your opportunity, this is it. We're in that opportunity right now.
Okay, so coming up 3 o'clock on Closing Bell as our time is quickly running down here. Tom Lee, Jeremy Siegel, Richard Fisher on what all of this means now for the Fed. I haven't talked that much about that. We will at 3 o'clock. Alex Kantrowitz as well. Josh, what's your final trade today?
Toast, Value Act Capital just doubled their position in the stock right after the earnings report. I like it.
Okay, Sarat, Disney must be you.
Sticking with Disney.
Service now.
Yeah, that's
Malcolm.
me. Look how it's trading as the world is melting down around us today. Maybe we finally have touched the bottom.
Well, we shall see. Joey T.
ResMed, all this volatility, a lot of people have sleep disorders like me.
All right, so let's see where this market goes over the next few hours, and I'll join you on the Closing Bell. All right, guys, thanks so much. Welcome to Closing Bell. Scott Wapner live from Post 9 here at the New York Stock Exchange. This make or break hour begins with, of course, the markets, the war, a volatile day yet again. Take a look at the majors here with 60 to go in regulation. And once again, we are trying to rally into the close. We're certainly off the worst levels of the day, and that says for all of the major averages. The Dow only down now by 2/3%. S&P less than 1%. The NASDAQ as well. Russell was getting hit especially hard earlier today, and it is still lower by 1 1/3%, but a bit of a better looking picture at this very moment as the final stretch begins. We're watching oil. It is a very big focus yet again. We had spikes earlier, again, off of those levels now, still higher though. Yields, they've been moving higher as well. And away from Iran, we're watching shares of Blackstone today after its flagship private credit fund sees record redemptions. We'll have much more on that coming up as well. It's a very big story, and there was a very big interview on this network earlier today. Let's begin, though, in Washington, where the president spoke in the Oval Office earlier. Our senior Washington correspondent, Eamon Javers, joins us now with the very latest. Hi, Eamon.
Hi there, Scott. Yeah, one of the things that we're trying to clear up from the president's appearance in the Oval Office earlier today is this question of what he meant when he talked about trade with Spain. The president venting some frustration with Spain and the government there, saying that they refused to allow U.S. military assets to deploy from Spanish territory during this attack on Iran. And the president said during this press interaction in the Oval Office that he told his Treasury Secretary, Scott Bessent, that we don't want anything to do with Spain. We're going to cut off all dealings with Spain. So the question is whether or not the president meant that he's imposing a trade embargo of any kind. Here's what he said in the Oval. Take a listen.
They were the only country that in NATO would not agree to go up to 5%. I don't think they would have agreed to go up to anything. They wanted to keep it at 2%, and they don't pay the 2%. So we're going to cut off all trade with Spain. We don't want anything to do with Spain.
So the president there suggesting, or seeming to suggest, that he wants to cut off all trade with Spain. Scott, I can tell you that I've been in contact with or reached out to the Department of Treasury and the U.S. Trade Representative's office. No answers yet to our questions about what the president meant in the Oval Office and what exactly the status of U.S. trade with Spain is at this point.
Eamon, there's also the obvious question, and it was asked of the president today in the Oval. What led to these strikes in the first place when they occurred? Can you discuss that at all relative to what the Secretary of State had to say last evening? Because there is some level of inconsistency there.
Yeah, there's been some real confusion about exactly what Secretary Marco Rubio meant yesterday when he was talking to reporters on Capitol Hill. What Rubio said was that the imminent threat presented by the Iranians was that the United States knew that the Israeli government was going to attack Iran, and in that case, Iran would respond against the U.S. So rather than sit there and absorb that punishing attack from the Iranians, the United States decided to go in alongside the Israelis into this attack on Iran. Now, that provoked a lot of controversy, the idea being that, wait a second, is the Israeli government in charge here or is the U.S. government in charge here? Who decides when the U.S. goes to war? The president today adamant that it wasn't the case that the Israeli government tipped his hand. It might have been that he tipped their hand. That is, that he was the one who made the decision. The president really anxious to dispel any notion that any government other than his was the decision maker here, Scott.
All right, Eamon, thanks for that update. Appreciate that very much. Eamon Javers in Washington. Let's bring in CNBC contributor, FundStrat's Tom Lee. Now he's here with us at Post 9. It's good to have you back.
Great.
Your thoughts as you look at these markets? Been real interesting price action over the last couple of days. Thought our reporters set the table very well on the issues at hand that investors need to keep their eyes on. What about yours?
Yeah, I think the headlines have been scary. No one wants to see the U.S. in a conflict. But I think it's been spot on to note that markets have been taking this much better than expected. I don't think anyone can say we're bottomed yet, but this is what looks like the makings of a bottom, right? That you get bad news and the markets are taking it in stride. And more importantly, I think we've had a position reset. And so on the other side of this, I think is going to be a lot of opportunity.
What would give you the confidence to say, you know what, that's a sign of a bottom? What do you need to see?
Well, some things like if we go back to April, a simple thing would be the VIX making a spike to over 40. Last year was 80, but we won't get to 80. And then, of course, retracing. That would be a clean sign because that's so much de-risking. Another sign would be we get another scary headline and gold continues to sell off, and then stocks actually turn green on the day because that means we've washed things out. I think we're pretty close.
You're watching oil as closely as everybody else is. I thought it was interesting, some of the notes today. UBS says we expect only minimal or a brief disruption to global energy supplies. We therefore stick with our base case that U.S. equities, will produce good gains this year. Katie Huberty over at Morgan Stanley. Recent geopolitical events unlikely to change our bullish view on equities over the next 6 to 12 months.
Yeah, I mean, I think oil. I think we saw things that kind of made sense to me. Oil spiking on closures or potential closures of the Strait of Hormuz, but the response from Washington. And I think that's maybe more important, that I don't think Washington wants high oil prices into the midterms. And of course, it's very unpopular with Americans. I mean, it's a big burden. So I'm going to be in the camp that I'm watching the price action. I think it's encouraging that oil's not surging into the close.
Hey, part of the Huberty note focuses on the AI trade, which has been really interesting, I thought, over the last couple of days. Back, some might say, to that safe haven type price action. I mean, look at right now. Microsoft's up, Meta's up, Amazon's up, Nvidia's traded better over the last couple of days. What do you make of that?
Well, in our view, March was the makings of a bottom because the software, the Mag 7, and the cryptos we thought were like 90% through to their winters or declines. They are outperforming, and I think that's a sign of leadership. But fundamentally, you're absolutely right. If we get global trade disruption, you still need AI, and you still need the Mag 7. So I think they're actually good fundamental stories.
There's a technical side to this story, too. Stay with me just a second. Wisdom Tree chief economist Jeremy Siegel. Fundstrat's Tom Lee, of course, is still with us. Professor, it's good to see you. Love your thoughts here on what you make of these market moves over the last couple of days based on your experience.
Yeah, well, when I sent my notes over at noon, Scott, I said we have to keep the Straits of Hormuz open. I said that was critical, and the news we got over the last hour is really good about that. I certainly expected the U.S. to provide insurance, but we need the escorts, and I think success on escorting tankers through would be a big political victory for Trump. Some of the early developments that we had hoped for, the rising up of the Iranians, the replacement of the supreme leader by someone that would negotiate with Trump, that has not happened so far. So I think the next step is if we can keep that straits open. Iran has said, we're going to prevent tankers from going through. That would be a political victory, and I think that would be very, very positive for the market. But that's going to be something that I think we all want to see over the next week or so.
Professor, you've seen a lot of markets during times of turmoil, certainly war and other events that have shaken investor confidence at times. Are, in fact, those moments what the charts have suggested to Jonathan Krinsky? Missiles fly, time to buy?
Yeah. Generally, the fright of war and the angst of war has been a time to buy. When World War I started, people, the exchange was so nervous that it was going to be a total collapse. They closed the New York Stock Exchange for 6 months, which is the longest period of time in U.S. history it's ever been closed. But the war actually happened to be good for the U.S. economy. So that when they reopened it, stocks were rising, and then they just absolutely soared up to new highs. So that sort of told people, you know what? Wartime is not always a bad time for the markets. And certainly we're not in World War I, World War II. Certainly let's hope it doesn't get that way. But it had those periods, when VIX is above 20, I know Tom wants it to go above 40. That would be the spike that would probably mark the bottom. But it means there's an awful lot of hedging that is going on, a lot of risk positioning. If we get through this war with some of our objectives through, I think we're ready for a big bull market in 2026.
You want to opine on that?
Yeah, I agree with almost everything said by both Krinsky and Jeremy Siegel, that this is all the hallmarks of creating some good opportunities. So I think investors do need to look beyond the headlines, maybe think 3 months, maybe even a month forward, and we just have to kind of wash through this bottom. But we already know where the leadership could be coming from. It's the software, the Mag 7s, and even the cryptos.
Professor, does this, like Tom's suggesting, perhaps rekindle the mega cap trade in some respects for the idea that at times of turmoil within the markets, these have tended to be a bit defensive?
Yeah, well, I remember once we thought that Apple was the big defensive stocks. When there's times of potential recession or international disturbances, really no stock is totally immune. We really need to get through this, I think, for the bull market in both segments of both the value stocks and the rotational stocks as well as the Mag 7. But, let me tell you, when you take a look at some of those Mag 7 stock like NVIDIA that selling in the low 20s, some even say lower in terms of price earnings ratio, that is an awful lot of discounting, let me tell you, for a company that has been growing 30-40% a year.
Yeah, you would agree, though, in the bigger picture, as we wind our conversation down, that energy, that complex, and oil prices are the most important thing to watch right now. Not only from a sentiment standpoint, obviously for the economic fallout perspective, and then how it relates to the Fed as well, and what its road ahead is going to be.
Yeah, and as Tom mentioned, we are coming to the midterms. And, we have had low oil and gas prices under Trump. Now, the wholesale price of gas, let me tell you, has gone up 50 cents over the last 3 days. Now, it takes about a week to work into the pump. I worked it out that if it does go up by 50 cents, we will we will be in the middle of what gas was during the Biden administration, but no more Trump discount that he was counting on early on. So it's not only a question about the Fed does and the economy. It really is going to be important for the political outlook.
Tom, you get the last word.
Yeah. Well, I'd say I think investors just need to be kind of patient, cautious, and wary, have a bit of firepower, but I think opportunities are emerging.
All right, gentlemen, I appreciate very much the conversation as always. Professor, we'll talk to you soon. Tom, thanks for coming.
Hey guys, welcome to Blue Cloud Trading. I'm George. It is Tuesday, March 3rd, 4:30 p.m. It's after the market close. A very volatile day today. You can see that the Dow was down 0.83% for the day. NASDAQ down 1.02, S&P 500 down 0.94, and the Russell 2000 down 1.73. It was down a lot more earlier in the day. As you can see here, around 10:30 or so, the market started to recover in all the indices, which is positive. We just saw some clips from Josh Brown, from the halftime report with Josh Brown, Tom Lee, and Jeremy Siegel. We're going to cover a whole number of those stocks, folks. Let me show you very quickly, briefly here, and then we'll get into a little bit more analysis of those index ETFs. So the SPY, the Qs, the Dow, the Russell, the VIX, which spiked 9.89%, and the Euro stocks. FEZ is the ticker symbol for the Euro stocks. The 50, top 50. Then you've got Mag 7 stocks like Apple, Amazon, Google, Meta, Microsoft, Netflix, Nvidia, and Tesla. We'll be looking at all those. We will also look at the following. Look at this, 19 stocks and ETFs that were covered here. Actually, let me remove that because we will be covering it at the top part here. We will also look at, are you ready for this? 8 of our members' requests. So there's a whole bunch of things we're going to be looking at. We're going to use the Ichimoku indicator. It's going to help basically give us an assessment, a quick assessment of what's happening. What's the trend looking like? We're going to get a sense about that for all of these ticker symbols. Let me show you something. Check this out. The Dow closed, right? 400 points after falling as much as 1,200 points as the Iran conflict volatility continues. Huge drop today. When I looked at the heat map this morning, my goodness, it was all a sea of red, but things did recover a bit. Now let me show you that here. So all of this was red this morning. Obviously, it was looking very dire, and then the market started to recover a little bit. You can see Microsoft was actually up for the day, 1.35%, Palantir up 1.41, CrowdStrike up 1.71. Some of the software stocks like CRM now, Intuit, Adobe, they were all up there. IBM was up, Accenture. The financial stocks were actually okay. They did all right. Like JP Morgan was up, Visa, Berkshire, MasterCard. Healthcare stocks, not so great. You see a lot of red there. The industrial stocks got beat up a little bit today. Consumer defensives, just Walmart and Costco look pretty strong there. Target as well. And Tesla was down 2.7%. So, yeah, when you look at when we look at this themes ETF, I'm sorry, the themes map here, cybersecurity stocks did pretty well today, and so did the software stocks, as I just mentioned. Some of the fintech, like payment type stocks, like Four and Toast and PayPal was up. Neobanks did okay, right? Up here under cloud computing, the multi-cloud, there's some of the stocks that were up, and then of course cybersecurity, some of the companies and how they performed today. Interestingly enough, though, look at the commodities. Like gold, for example, was down 8.53%. Silver was down 8.85. Precious metals down 8.31. Even rare earth down 5.5%. So that is kind of an interesting little twist. However, as you'll notice in the charts in a few moments, even they started to recover towards the end of the day. So let's take a look at the charts. We're going to start off with the S&P 500, the benchmark, of course, and top 500 companies. Let's see what's going on here. Now, it dropped 1.1% today, but I want to showcase this specific candle. Now, this is a bullish spinning top. If you're unfamiliar with this, you should certainly take a look at my Twitter page. Let me just go to that real quick. What you want to do is go to @BlueCloudTrader. That's my handle on Twitter, on x.com. And what you want to do is kind of scroll down, click on the highlights tab. Once you're on that, you scroll down some more, and you'll find this candle pattern reference sheet. Click on that. You can download this too, by the way. You can you can share it and whatnot. But basically, this is what we're looking at. We're looking at that nice bullish spinning top. If you see this type of candle after a pullback, that is extremely bullish. Now, that same candle, if it's red and you see it like over here, that's the bearish version of that. If you see that after price has been moving up, that can be the opposite effect, right? You can have a really negative situation occur. But the SPY, not only did it create this candle, but a couple of other things happened. Well, number one, price stalled at the Ichimoku cloud. This is called the Senkuspan B. And actually, you know what? I probably should have given you guys a quick little tutorial on this indicator. Let me just do that very quickly. I'm going to show you the weekly chart very quickly. Let me see. Let me look at. I want to find one that's kind of it's going to be easy to explain to you guys here. All right, let's look at the Russell real quick, and then I'll get rid of these lines for just a moment, so I can show how this indicator works and how you can use it to help identify the strength of what's happening. And it's really important to always use two time frames. In my opinion, the weekly chart is really one of the most watched after time frames, and the daily. Okay, so weekly and daily. So here we are on the weekly chart. Each one of these candles represents 1 week. You can see that today, all right, so far we are currently under this green line. This green line is actually the midpoint of the last 9 periods, and it's plotted right there. It's called Tenkan-sen. It's part of the Ichimoku indicator. This red line is the Kijun-sen, the midpoint of the last 26 periods. It's slower, so we always want that one to be under the green line. Then you've got the Ichimoku cloud. All right, the Ichimoku cloud is comprised of 2 lines, the Senkuspan A and the Senkuspan B. The Senkuspan A basically takes the midpoint of these 2 moving averages, the green line and the red line, projects that midpoint 26 periods into the future, and that's where we would find it. And the Siegel B is actually the midpoint of the last 52 periods or 52 candles. In this case, the 52 weeks, right? And instead of plotting it under or above the candle, it plots it into the future, 26 periods into the future, creating the cloud itself. And then you've got the Chiku span or lagging line right there. That's actually the current price, but instead of it, being a candlestick pattern here, it's a line form. And it's projected. So here's the current price, projected 26 periods into the past, right? And so we want to see where that white line is in relation to the candle 26 periods ago. If that white line is above, it's very bullish. Back here, where you can see it was under, that was bearish. So when you have all the elements basically in order, that's very bullish. And especially if you have, like we did last week, price was still holding above the green line, the Tenkan-sen. So everything was in alignment on the weekly chart, but this week we are currently under. But we won't know what this candle looks like until Friday anyway, right? We're just we're not even halfway through the week yet, right? It's just Tuesday. So things could certainly improve. Let's take a look at the daily chart. So here it is on the daily chart. You can see that it's not looking as great, right? We've got a few negative things happening here with the Russell 2000, for example. The Chiku span is under price. You've got price inside the cloud, and it's really important that price be above the moving averages and above the cloud. Then you know that you have a bullish trend. Okay, when it's the opposite, like back over here, price got under the cloud, under the moving averages. You can see that what that led to a 25% drop in just about 4 months. All right, that was during the announcement of tariffs. I'm sure you guys remember that. Even before then, it was starting to show weakness. So, yeah, so that's basically how you can read this indicator. Now, let's get back to the S&P 500. let's throw on our trend lines because those help us also with finding resistance levels and support levels. And we are currently at a support level of 671.20 based on that prior low right there. So I'm kind of optimistic at this point now that, hey, we may actually see a bounce here tomorrow. Nobody can predict the market. So we have to, it's a, day by day, hour by hour, minute by minute review essentially. And what the charts do is they help us clarify what's really happening. So when you're looking at a daily chart, obviously we know what's going on here. During the day, I do like to look to see what's happening on lower time frames. I might look at a 1 hour chart, for example, or a 30-minute chart. Okay, there's that big gap down that we saw occur over during the weekend, and then I'm sorry, I take that back. Since last night, right? So that was Monday at 4 p.m. That was that dotted red line is the closing price, and the dotted green line that you see right here is the opening price today. So we had that gap down, price dropped a little bit, and then it started recovering on the 30-minute chart. You can see that also in the 5-minute. There's a 5-minute chart. So it's very interesting how things can turn around very quickly, and so you just readjust your whole situation. So right now, I suppose I'm a little bit more bullish here with this particular candle that just formed. What I don't like is this secondary indicator that I also use. It's called the directional movement index. When I see that the negative DI9, which is this red line that you see here, is moving up, as you see right there, and simultaneously the green line, the positive DI9, is moving down, okay, and it's under the red line. That's very bearish. The direction is obviously in a downtrend in that situation, and you can see that. And especially when you see that white line, which you see, that's the ADX9 moving up. That represents momentum. So the momentum has been to the downside, but this candle is telling me that there's potential for a turnaround tomorrow. Okay. Anyway, that's what the charts are telling me. So let's keep going here. We're going to take a look at the Qs, QQQ ETF under the Ichimoku cloud, very bearish. If we look at this is the daily chart that you're looking at here, but we're close to a level of support, the 200, the rising 200-day moving average. Here's the weekly chart. We are under the moving averages currently. So the Q is obviously not looking particularly great, down 1.18%. But again, we have a doji type candle or a spinning top, bullish one after this little pullback. That too might move up tomorrow. We'll see. It certainly just means there was a stalling as far as a breakdown in the markets. There were a lot of players or uh, groups out there that were willing to buy up the pullback that occurred this morning. Here's the Dow. Same thing. Now, if I remove, see how it looks like it's just a line there? If I remove those, you can see that's called a doji. So that's a reversal candle as well. After a pullback, if you see this, higher probability tomorrow that we're going to move up. But again, so many negative things are happening recently, including this red line here crossing above the green line with the directional movement index. That's the weekly chart. Here's the daily. Again, stalling at the cloud. So I think there's nothing really to do. I certainly wouldn't be adding any positions here, not until we get more basically evidence that this thing is a legitimate, going to be a legitimate shift in the market here. So we don't have that yet. Tomorrow we could get more bad news, and remember, it's the news that lead the market, and the chart. All the chart does essentially is share with us like what's really happening, right? Showing us the psychology, showing us the buying, the selling that's occurring between all market participants. You can see the volume here was a big volume day as well. So the fact that the bulls were able to recover this, like if again looking at the Dow, if we switch it to a 5-minute, you can see the gap that happened this morning, right? Like overnight, right there, and it dropped just a little bit more, and then it started getting bought up here. We could see the higher all the all the things started to get bullish. Like right here, for example, we had a higher low from this one, and we it almost kind of looks like a little bit of an inverse head and shoulders right there, doesn't it? And we broke that neckline right there, and then price started moving up. We came to the 200, and then it started to decline towards the end of the day. So you can see here, if we look at the time frame, once we reach this level around 3 p.m., The Dow actually started to drop 0.37% from 3 p.m. Into the close. So, and actually, right now we're looking at post market as well, and the prices still continue to drop right now as we speak. So, notice how it says here, this is 4 p.m. This is where we closed. We're still dropping a little bit. All right. In fact, let me just switch it back to the closing. There we go. All right, that's better. Let's look at the Russell. And let's look at the daily chart. It's inside the cloud. We have a bullish candle on the weekly chart, a reversal candle as well. We'll see what happens there. The VIX spiked 9.89%. Let's look at that on the daily. I usually like to review this on the daily chart. There's that big spike. Now we have a long wick, which represents that the volatility, we want to see that dropping, not spiking up like it did today. The good news is if you look at, again, at a 3-minute chart, it spiked, but then immediately started to drop. But like I said, around 3 p.m., things started to move back up again. So that's concerning. FEZ, the Euro stocks, let's look at the weekly chart first. Had a big drop, right? This week it's dropped quite a bit from last week. Here's the daily chart. Look at these big gaps, right? So I didn't do a video yesterday, and you can see what happened here. It gapped down, and then today gapped down some more. It actually gapped under the cloud right there. That was the opening price. And then look, the buyer stepped in and pushed it back up. So here's a 3-minute. You can see the gap, and then it started getting bought up. Again, hard to decipher if this is the end completely of the trend, because if you look at a weekly chart, we're still hovering right above that. I mean, we're slightly under the Kijunsen right now, but this candle is still forming. We won't know what that looks like until Friday. If price closes, around I'd be looking to see what FEZ looks like around 3:30 p.m. If the candle, the body of the candle is under the 26 period here, it's more than likely to continue to drop into the next level of support, which will be the Ichimoku cloud itself. We could see a potential drop of 12.6% before it finds a little bit of support down here. The good news is the last time that we crossed under the Tengen-sen, which was back over here in November, we found support at that 26 period twice, 2 weeks in a row, and then price continued. So will we see that again? To be determined. All right, now there's a whole lot of stocks we got to get through. Now that you understand the rules of how this indicator works, we don't really need to overanalyze. I just wanted to give you guys some insights for those of you who are new to the channel. Here's Apple. On the weekly chart, we're still holding up above the Tengen-sen, the 9 period. On the daily chart, we're inside the cloud. So this is not a buy signal here. All right, I would stay out of that one for now. Amazon is under the Ichimoku cloud, right? That's also something I would stay out of for the time being. Here's the weekly chart inside the cloud, bearish. Google is on the weekly chart in between the 2 moving averages. It's in an equilibrium zone here. It doesn't really have a clear direction on the weekly, and on the daily chart, we're currently under the cloud. But again, we had a bullish candle by the end of the day, but that's not a buy signal in my book. And the direction movement index still looks very negative. You've got Meta. I mean, very messy chart here. Under the 200, under the Kijunsen. I'd stay out of that one. Microsoft is still under the Ichimoku cloud. Yeah, it showed a few days here of a move up here. 3 days isn't going to change the direction, though. So I'd stay out of that one. I certainly wouldn't be shorting it, though. Like I said before, when I said this about Netflix over here. When price gapped up above the Tengen-sen, that's when you know. And remember, we had with Netflix, we were developing this little consolidation box, right? Now, typically, when you see one of these, and then if price drops under and closes under, then you can expect it to expand more to the downside. However, when price breaks back above, then you have to give it the benefit of the doubt that this could be the bottom, and you want to exit any short positions. If you're shorting and betting against Netflix, that's the worst time to do it, is when it's starting to show some strength after this long extended decline. And you can see how it was hugging those moving averages. That Tengen-sen especially was being hugged quite a bit. And once it got above, right, gapped above, in fact, it showed a little bit of a change in the sentiment of what was happening. And now here we are. Look at it. It's up 22%, 22.6 to be exact, from this point right here. Okay. That's a big move. The very next day it moved up. And then we had the big gap up on Friday. And look, it's still moving up. Now, this is where I think it's going to have a little bit of a hard time because you get the cloud. And the cloud is a natural, when price is under it, and under the Seiko span B as it is right here, that's a natural level of resistance. And so we might see it pull back, right? So just keep that in mind. And we're still under the 200. So that's the daily. Here's the weekly. And look at this. We're also coming to resistance on the weekly chart. There's the cloud. The cloud is literally just 2.2% away from where we currently are. You've got NVIDIA still in this consolidation box on the weekly chart. Check it out. Okay. Whoops. Throw on the rectangle. Okay. Very tight range. Still holding. Look at the direction movement index. Do you see this? It's just crisscrossing. And the other thing you also want to pay attention to is what's happening with the ADX, the white line. If that's declining, as you see right there, right, then that's consolidation happening. Only when the ADX starts to move up, like it did right here, and the green line is above the red line, all right, it can give you some, like a little bit of a hint that, hey, we might get a nice little move up. And then when the ADX declines, like it did right there, maybe you exit the position because it did lead to a 4 or 5 day decline. All right, Tesla, not looking great. It's been declining, and see something. It is holding above this level. See if I have a. There we go. Actually, that high right there, the 367.71. But it looks negative on the weekly chart. Here's the daily. Stay out of that one, in my opinion. I mean, it's finding some support at least at the 200. That's that dotted yellow line that you see right there. But it's under this symmetrical triangle that I had drawn recently. That's pretty bearish. That's a again, when price closes under a symmetrical triangle like it did today. Right, yesterday it did not close under. It recovered, came back into the triangle. Today closed under. I'll just show you guys that pattern, which you can find again on my X page. Scroll down below this, you'll find this pattern reference sheet. And here is the symmetrical triangle I was talking about. The bearish variance is when price, as you can see here, was moving inside the triangle, but then closes under it. Okay, there's the rectangle that I just mentioned a few seconds ago. All right, let's keep going. So we got Tesla, nothing to do here. All right, now we're going to run through the CNBC stocks. What I've done to make things a little easier for you folks also is I've highlighted the best stocks and ETFs with a little blue flag over here. What that means is that from a technical perspective, these look good, not just on the weekly time frame, but also on the daily. It passes the test. Typically, those are the types of stocks that I'm interested in. I'm looking for strong stocks that are breaking out and showing strength versus weakness, because those have a tendency to continue in the correct direction, right, to the upside. So look at CBOE, Global Markets Inc. Here it is on the daily chart, very bullish today, up 2.17%. Here it is on the weekly chart, very strong, beautiful uptrend. That's what you want to see. Pay attention to how right here found support at the Kijinsen, here again, right there. Never closed under that red line. Okay, look at this. It touched it right there and continued on. So as long as it maintains above those moving averages and it continues as it is right now, I think you're in the clear with CBOE. I like it. What about CME? Another stock. Look at it. There's another beauty. Okay. Again, all the elements of the Ichimoku are in the correct order. You get the Senko span A above the Senko span B, so you have a bullish cloud. The green line is above the red line. The Chiku span is above price. Price is above the moving averages. That's it. ADX is moving up. The green line is above the red line. Okay, clear as day. There's the weekly, there's a daily chart, right? I like this on both time frames. And then you have a higher success ratio if you own stocks like this specific one. And those are the types of stocks that I talked about in the weekend video. Guys, I do a members only video every weekend. And if you guys want to get access to it, let me show you how. All right, so here it is, Blue Cloud Trading, my channel on YouTube. You can subscribe for free, hit the notification bell. You can watch videos just like this one for free. But if you want to get additional exclusive this member only video along with access to the older ones that I've done, I've been doing this for over a year. You can find these member only videos here. Okay, so you can go back in time and review, and all of these videos are pretty educational as well. You're gonna get some tips from every video, I think, from about my trading strategies. So consider becoming a member. This one I posted just 2 days ago. It's a 1 hour, 5 minute video. So I go over my entire portfolio. I also share 27 new stock ideas for this week, basically. And in fact, today I added one of those stocks to the portfolio that was up. So yeah. Anyway, that's how you do it. You click the join button, essentially. So right next to the right here, you hit the join. Okay. Blue Cloud Supporter. You won't be able to get access to that under Blue Cloud Supporter, but you'll be supporting the channel under Blue Cloud Trader. All right. This is where you get access to the exclusive member only strategy videos. And then if you want to go one step further, become a Blue Cloud Legend level member. You get access to those exclusive member only videos. You can request up to 3 stocks or ETFs be analyzed, you know, per month. And then also access to some of my day trading videos that I've recorded, as well as, now this is the most important part, the daily stocks and ETF trades updates. So like if I do place a trade throughout the day, I do share the trades, in a post. Let me show you guys where you'd find it. So right next to posts, once you become a member, there'll be another tab, membership. That's where you'll be able to access those as a legend level member. So you'll know what I'm up to each day. And I also give a quick summary as well as additional trade ideas from the proprietary scanner that I have. Okay, guys, let's get back now that we got that out of the way. CME, I like it. Like I said, DVN, I like. Devon Energy. Now, here's the daily chart. It did drop 2.11%, but look at it. It did hold up at the Tengensen, the 9 period. All right. So oil, a lot of profit taking took place today with the oil stocks, but they're still holding on. And I think that there's I don't think this is the end of the trend for oil, the uptrend. Here's the weekly chart. Now it is stalling. It is stalling at this declining 200-day, but price is still above the moving averages and above the cloud. I like Devon still. I just wouldn't be adding here. I just wouldn't be adding it because it's showing a little bit of weakness today, but I like it. Here's Fang, Diamondback Energy, also doing something similar where it dropped. Do you see these wicks? Notice how the wicks on the bottom are longer. Just a little tip for you, are longer than the ones on the top. What the wicks represent is buying. So what happened was the sellers pushed the price all the way down to the Tengensen, the green line. The buyers stepped in, boom, and bought it up. Same thing right here. Okay. So you can see all that. Of course, if you switch it to a 5-minute chart, there it is. So there's the pullback, and then it just started getting bought. There's a low right there. And you can see that price had reached $173.38 or so, somewhere around there. And from that point, from 2:45 p.m., it actually moved up 2.43%. There's the move up. All right, let's look at there's a weekly chart for you as well. Very bullish still, even though we've got a couple of red candles. FCG, this one I'd be a little bit more cautious about. What is FCG? Because this is the first time I think I'm bringing this one up. And the reason I'm bringing it up is because you might have heard about natural gas doing really well recently. If you're interested in investing in a fund, not, this is they call it the First Trust ISE Okay, Revere Natural Gas Index Fund. The reason I brought up this one is because it's the highest volume pure play natural gas ETF with no K1 form. Okay, um, so it offers exposure via stocks rather than futures. While United States Natural Gas Fund, UNG, has higher overall trading volume, it typically issues K1 forms. FCG is structured as a regular ETF, avoiding the complex tax reporting. So there are some ETFs that require K1 forms. It can be a hassle. So this is another way to invest. Now, this one was down 0.28%. As you can see here, if we look at the daily chart, it's slightly down. But look at the chart. You can see that overall we're still in an uptrend. I don't know if this is going to be the top. It could potentially be the top. Now, this weekly chart is showing red, but remember, this candle is still forming. This is not the end. Um, this is not the final candle pattern yet for the weekly yet. So, okay. GLD. I like this gold ETF here. GLD is above the moving averages still on the daily. Tengen Kijinsen, it's above the Ichimoku cloud, right? The Chiku spin is still technically above price. So it also gets a flag here. If you look at the weekly chart, we're also holding up right above that, the moving averages. Yes, we did have a down day. And yes, we might have another one tomorrow. I don't know. I mean, but right now, the fact that we stalled and there was a little bit of buying happening, there's the 3-minute chart. You can see that once we drop down to these levels here, 459, since that point, and that was around 10:18 a.m., gold started getting bought up again. It was up 1.93% from that low. So there you have it. LIN I like. Let me show you the daily. Here's the daily chart. So pull back, got under the 9 period, and then recovered. Same thing on the weekly chart. We're still holding above the moving averages. And I mean, we're pretty much hitting all-time highs with this one. This is in the basic materials sector, specialty chemicals. But yeah, I mean, it was down 1.5% today. Oil K, another, this is an ETF that's also K1 free. You don't have to fill out that K1 form. So here's the weekly chart. Look at the weekly. It got above the 200. The cloud is bullish. The ADX is moving up. It got above this level. I don't know if it's going to close above that level by Friday. We'll find out. Here's the daily. All right. It reached this level and started getting sold off. It dropped 3.18% from that high. So it's still technically sound, but just be very cautious. I wouldn't be adding positions here. It's kind of gotten a little far away from the moving averages. XLE is the energy sector ETF. This one here stalling right at the Tengen, and here's a weekly chart. Okay. What about ACHR? Onto the cloud. So this is where things started to look more bearish. The rest of these are not looking that great. Um, they don't have a blue flag. As you can see, it's under the cloud. I'd skip it. So it's as simple as that. That's the idea here with Ichimoku is if you see a price is under the cloud, expect it to stay under there for a little while and just disregard it. Don't think about adding positions here. Wait for it to show a little bit of strength, at least come out of that cloud, right? And you'll have, like I said, like look at this over here. You see how price was under the cloud. It got above the 200, and it moved up approximately 192% in just 1.7 months. So again, it's just a smart way to go. Here's CRWD. That's still under the cloud. It's still in decline. I wouldn't be shorting it because it did close today above the Tengen. Okay, so do not short it, but do not buy it either as a position. And Disney, still looking very bearish under the cloud. No on that one. ECL, hold back. It's under the Tengen. It's showing more strength today as it formed this nice bullish candle, but it needs to get above the Tengen once again. Here's a weekly chart on ECL. It's still holding up quite well overall. EEM on the weekly chart had a big drop, 5.01% today. Here's the weekly chart, stalling right at that purple line, which is a monthly level. Let's look at the monthly chart. The monthly level is based on this shooting star. Let me show you. That's the shooting star candle right there. And that it goes back to February 26th of 2021. So We got above it for a couple of months, and now we're stalling right there again. So this is very interesting, isn't it? Look at that weekly chart. Here's a daily chart too. Look at the daily. Came down another shooting star came down to the cloud and found some support. But not a buy signal here. NOW is under the cloud service now. Stay out of that one. I wouldn't be shorting it though. We might have a double bottom right there. It is a double bottom. It actually closed above that level. However, we have a lot of resistance still, so I wouldn't be getting in here. RMD is under the Kijinsen and the 200 dotted yellow line there, so I'd stay out of that one. Silver re-entered the cloud today, so I'd stay out of that for now. We had broken above that level, but then we never got above the Kijinsen. TOST wouldn't be shorting here because it's showing some strength recently, but it's still in a decline. And again, just because it's showing temporary strength, like it is right here, showed it a little bit right there, showed a little bit right there, showed a little bit right there. You can see this little move up. It's moved up for a little while actually, but then every time it came to the cloud, boom, boom, got rejected. Or the 200-day right here. So stay out of that one. Okay, now we're gonna look at members requests. Okay, so we got IBRX, Immunity Bio Inc. Let's start off with a weekly chart. So the cloud is very interesting. Check out the future cloud. See how thin it is. That's because what's happening with price is it's moving up very quickly. So there's a big candle that broke through the cloud on high volume, which has, of course, led. And then it created a little base right here. Okay, continued up with another big candle. Okay, and now we're still holding above the high of that candle. But what's happening with the weekly chart is we're getting some reversal candles here. We got that spinning top. We've got that little shooting star. Here's the daily chart. Daily chart still looks bullish. Problem with this is it's not a profitable company yet, but the technicals look very sound. Okay, it's just not at a profitable zone quite yet. Next earnings is going to be on May 11th. Let's take a look at the next one. LITE, that's Lumentum Holdings Inc. It's in the technology sector, communication equipment. Here it is in the daily chart. Beautiful chart. Notice how it's been holding above the Tenkan. I like it. On the weekly chart, still looking very strong. Okay. Now the thing with this one is it's very volatile. You can see that it had an 11.34% drop. Here's the daily chart again. Small little move that you see right there in the charts, it was an 11.34% move down. The good news is it stalled. So it stalled right at the thing, and there's a higher probability that we're going to get a bounce, but nothing is guaranteed in the market. So I'm just giving you a heads up. I would wait to see. If you don't have a position in this, I'd wait for some evidence that it's going to continue, especially if it gets above the high of that candle, and then I expect it would move up. Or if you get like a candle like this, see this? It's called a bullish harami right there. It's when you have a large red candle like that one, followed by a little small bullish one, and it's within the body of the candle. We don't have that yet, but if that forms, you might see it then pop. LMT, here's the daily chart, still looking very bullish. You can see we get a flag here. Looks good, looks good. Profit margin's good here. Here's the weekly chart. I mean, this is the first candle that's turned red here. But again, this candle is still forming. Friday, you gotta wait until Friday to know what this is gonna look like. Do I like the chart? I do. It broke through that 618.35 level, this prior high, which actually that should be 618.95. Let me fix that, folks. 618.95. There we go. To be very accurate here. So and I'll circle it. It's based on that level, based on that candle from October 25th, 2024. It's a long time ago. So we're still above that. It looks good. I like it. Weekly and daily, but it was down 1.3. RTX pulled back a little, down 2.65, still holding above Tenkan Kijun-sen. Here's the weekly chart, pulled back a little bit. So, I mean, it's still very, technically very sound. You got CW, Curtis Wright on the weekly chart looks great. Nothing negative to say about it. Here it's the aerospace and defense sector. On the daily chart, it's just barely under the Tenkan. And in fact, I think the bulls did try to push it above the Tenkan. They just maybe ran out of time. They were unsuccessful towards the last part of the day. They just weren't able to get it right back above the green line. But big effort to do that. And if you look at it on a 5-minute chart, there's the gap down and there's the buying that started right there around 9:50 a.m. It moved up 2.9%. You got GD. Here's the weekly, very bullish. That's General Dynamics. Here's the daily. We are above the cloud. The only problem with this one is that the Chico span, that white line is currently inside the candle. The green line is under the red line. But other than that, I like this on the daily because it also broke through this level. See how it closed above that right there? That's pretty bullish. And here's the weekly chart. I like that as well. So you can see it's almost like a, there you go. Nice little pattern right there. ESCC. This one, folks, on the weekly chart is currently dropping after it reached the 200, got back under the cloud. It looks like it's more than likely to continue dropping here this week, but potentially. Maybe another 4.26% over the next few weeks to reach the moving averages. Here's the daily chart. Okay, the daily looks a little bit more bullish with this hammer candle. Again, if you're unfamiliar with a hammer, let me show you that one. After price has been dropping. Okay, look over here, hammer on the left-hand side. You get this type of candle. Okay, long wick, small body. Doesn't really matter the color as much as where it is in relation to the prior, but it has to be under at the end of a pullback down at the bottom. So if you look at this, it pulled back. It basically got under the Kijun and the buyers stepped and they pushed it up. Here's the 5-minute chart that shows that. It's not even a very there's not a lot of volume on this one. Look at this. The candles can't even form here. Let me look at the daily chart real quick. Wow, there's only 7,400 shares traded on this. I wouldn't trade this. This is a dangerous stock to trade, in my opinion, because it's so illiquid. 7,400 is not enough. So I would if you've made some profits, I would exit this and look for something with some more volume. XLP. There's XLP, for example. It's got 36.7 million shares traded right here. Almost 40. All right. And then VKTX. This is Viking Therapeutics. On the daily chart, you can see it's kind of stuck in between the Tenkan, the 200-day, and the Kijun, right under the cloud. The cloud is still bearish, right? Right on the verge of maybe getting a bullish crossover right there. Let's look at the weekly. Yeah, it's still not looking great here. It's under the Kijun on the weekly. Inside the cloud, stay out of that one, folks. Down 4.23% today. And guys, that is it. That's going to do it for this video. I appreciate you for watching. Support the channel by hitting the like button, subscribe, maybe share this video with someone. And there's also a new way to support the channel. Every Monday, I believe that YouTube offers viewers something called a hype. We can basically hype a channel or hype a video. So consider doing that. It helps to push this into the algorithm so more and more people see it. Helps the channel. I appreciate you. Have a great rest of the evening or day wherever you are, and I'll catch you in the next one.